Well, good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Tuesday, the 23rd of July, 2024, and we're at 5:55 p.m. Central Time. So, as I told you, I thought we'd get a one-day rally in the stock market off of the Kamala Harris getting, if you will, $100 million, basically enough delegates to get the nomination. I think it's by August 7th, and then when the convention opens, probably pass on the first vote, and nobody's running against her. So that's important. Another event today, apparently President Trump, ex-President Trump, has said he's willing to debate her. He'd prefer it not to be on ABC News, but even that wouldn't stop him. And he's open to more than one debate. So there you go. So he thinks he can take her on. We'll see if that happens, but why not? I think we want to know more. I cover in my newsletter today with an article that was in Market Watch, if you get that. And it's an interesting article written by one of the opinion people there that talks about, let's assume that Trump wins and it's a sweep in Congress. Trump wins and he doesn't sweep in Congress. Harris wins, sweep. Harris wins, no sweep. What does it all mean? How does it all play out? Very interesting article, what it means for your taxes and so on. Before I get too far along, tomorrow we do have some data. We get the Mortgage Bankers Association. S&P Global Group's going to release their preliminary July manufacturing sector PMI. U.S. new home sales for June will come out. We saw home sales today, but not new home sales come out. They are not good. The amount that's gone up, we used to have like 3.3 million for sale. Now we're up to 4.1. So the numbers keep going up, but we went up another 4% year over year month. So that's important. EIA petroleum stock estimates will come out tomorrow morning as well. Then we have more talk because Israeli President Netanyahu will speak to Congress, the full Congress. Then he's going to meet with President Biden, who has miraculously gotten over COVID, and he will speak to America. And I'm talking President Biden will speak to America with his resignation from the campaign, similar to what Lyndon Johnson did that I recall many, many years ago. And then Mr. Netanyahu will go on and visit with Mr. Trump. So he's covering all his bases. Obviously, he's got to deal with Harris, Biden, Trump. So it's going to be a busy day for everybody. We will see where that carries you. Now, earnings galore. This is what you've got to remember. It's why you're down in the stock market tonight. Tesla didn't do that well. Sales aren't there. The unit volume, you're all counting on the robo-taxi. And Mr. Musk said he would be surprised if you don't have a ride in one by next year. Okay, but that doesn't tell us very much. Here's what I do know. Where's the profits from the selling of the cars? That's what you got to look at. Yet GM did pretty good. You've got real mixtures. I can go into one after the other. It'd be a whole show in itself. That's how many companies are coming out. But there is one company I paid attention to this morning, and it was UPS. Because when you look at FedEx, UPS, you get an idea of commerce in the United States that's obviously moving by air. And their numbers were not good. So this was, to me, a warning sign. At the same time, I am watching very carefully what the metals are doing. And in the copper market, I haven't been friendly this for a while now. I certainly was bullish at the top. I admit that, and got out and watched the market then fall $1 a pound. So it's really come down very hard. And this is probably getting close to the point where it's going to be overdone, probably between where we're at, and I've been saying maybe the 412 area, another 3 cents. Could you skid more? You could, because you've got people caught in the market, but I think you're getting down to good zones. Notice how the gold market's suddenly over the 2410 level. That's important. Energy markets tonight getting a little bit of a bounce, probably more due to the API numbers, which came out after the market, and I'll cover those in my newsletter for my clients tonight. Bonds and notes, interesting day. I hope you pay attention to what happened in the 2-year notes today. They had, I think, the size of the auction was $69 billion, and guess who bought? It was John Q., the public, not the prime brokers. Prime brokers got 9% of the amount. 91% went to the John Does. What does that tell you? To me, it implies that suddenly people are saying, and they didn't believe it at 5%, they thought you can go to 6%. Now suddenly at 4.35, 4.4, they're saying to themselves, I think I'm going to lock in some 2-year money and make sure that I've got something. If the Fed starts cutting rates, where's this going to go? So we'll see what that means, but that was the day. Now, this is a weekly chart of just closes in the gold market. Notice how we've been just hanging here at this 24.10 level. I think it's very clear the market is just sitting there trying to determine the next move. I ultimately think, and I'm sure I'll be wrong and you'll write me about it, but I ultimately think we're going up to another level here. And I say that because India lowered the tax today on gold, silver, platinum, copper, cobalt. I go on and on. So they are one of the world's biggest consumers of gold, by the way. I think they're the second largest consumer, and they really believe in buying it for jewelry needs and so on and so forth. So by taking their tax, I think they took the tax from 15% to 6%, and on other metals, they actually removed the tax. So this is a big growing economy, and they're trying to alleviate some of the problems there, and that should be supportive to the market. When you look at gold on a daily bar chart, we've had a correction. Okay, have we done any damage to the chart? Yes, you have. You went from this high, and notice how you had break lows all through here, the apexes of them, from here to here to here to here, and you broke through that this week. Okay. So now what the market has to do is restructure itself. But where do you think the market fell to and held? So often you'll hear me say, and I call the red line the 18-day average of closes, the line in the sand. And that's what we have right there. The second thing I look at, the market had been running. And I had a gentleman write, and I had said this is the Gorilla Glue trade. And when the Gorilla Glue trade ends, one of two things happen. You can roll over and go sideways, much higher up, or you can fall back to a major average if you lose the embedded reading. This often is your guidepost, that when this red line then crosses back underneath 79 on a close, that you're going to come down and go to that number. More times than not, you don't drop this hard, but you did drop this hard. Okay, you didn't start a bear market. You corrected an overbought market and made probably a 50% correction in there along the way. When you look at the gold-silver ratio, one thing's clear. Since the market cleared the 18-day average of closes, the higher you go, that's why it's in gold, the more ounces of silver you need to buy 1 ounce of gold. So gold is stronger than silver. And in the silver market, unlike the gold, which fell back to the 18-day average, this is trying to probe into the Bollinger Band and the 100-day average in green of closes. And that's basically what you've got. Are you trending? You are not. You have a higher high, lower low. So this was a vertical price drop that actually recouped practically the whole move, because you went from here to here and right back down. You've gone absolutely nowhere in the course of basically 30 days. In the copper market, this is the pain of China. China consumes 50% of the world's copper. So you've got supplies building because they're not needing as much copper as they did before. You've got production staying pretty flat with where it is. I'm not hearing any more outages of it. And that is driving the market down. But the reason I think the 412 area is you haven't been to this 200-day average since all the way back here in March of last year. There's nothing magical that can get under it, but more times than not, that is a big average. It's a 1-year average of price. You're coming down there. It is not a sign of strength, but it would certainly be if you were sitting by me and you're in between the Bollinger Band and getting close to that, I'd be saying, if you're short, don't you think you should lift some and see what happens? You're not embedding yet. If you do, we can always look at the market another way, and that would be my conversation with you. Now, you did slip through the 200-day average in the Bollinger Band here. The first number that I thought would hold would have been the 100 in the Bollinger Band, and you certainly did fight a battle there. I mean, if I take you back to it, you can see the kind of battle that it's fought. Magically, the market stopped right at that number. That's what I would expect. Now, if it's going to accelerate more, and that's what you don't know, but that doesn't mean that isn't where you take your first action. You're not embedded. If so, maybe it can get to the 200-day average. It's taking a little bit of time. Outside day to the downside. Do you know how to play outside days and what they mean? This is a continuation pattern. At the end of this video, I'm going to talk about outside days a little bit with you because they're so darn important. If you come up and can take out this high on Wednesday, you negate this pattern. If you don't, it stays in place, and maybe you're just now running that, again, the gorilla glue trade to the downside until it's over. You either embed or you start the correction. Keep your eye on the red line. It's going to give you an idea as to what happens there. And in the dollar index, we avoided the downtrend. You got up high enough to take out that high right there. So once you got over 104.20, which you did today by hitting 104.26, you broke this pattern. That does not mean that you've left the downtrend completely, because you still have the bias down as you're under the 18-day average of closes. But it is time for a correction, and you see it happening right here. So now that it's happened in the dollar index and you had a bearish embedded reading, the target, I'd love to see it hit, would be 104.32. It's not that much higher than where the market finished, another 15 points or so. It could get to the 18-day average, and I'd say it will have some resistance there. What I do believe has happened in the dollar is nobody has what's called a handle on it. They're trying to figure out, what does Harris mean? What does Trump mean? What is it going to look like in Congress? Does it change really the game at all? So we know the first thing you're going to see in the polls, and it should be this way, is Harris is going to show a bump. Democratic Party is going to show a bump. They're invigorated. Give it 2 weeks and watch what happens after the Democratic convention in August, because this is their time. This is where the news waves will pick up on them. No different than the Republican convention. During that, Trump got a bump as well. Now it's her turn to get a bump, and that's when the real race begins, and that's when we head, if you will, into the November timeframe. But it's after we get through with the convention in mid-August. It's right around the corner for us. All right. So you put it all together, you try to come up with game plans and understand where you're at. And that's where I think courses like this fit in. Outside days happen often, real often. They're often, more often than not, a pattern that says continuation. But when you get one going against the grain, it's very important. And does it take out swing lines? That's the key. So I give you all the examples: outside days down, the definition, outside day up, where you go with them. And then we do it with videos showing the actual workings of it on charts. And then in the morning, I take you through real charts and show you in my video how it is, because you get 14-day trial to my research with this, both the spider and the spider, the ETF, the futures markets. How do you get all this? It's simple. Just go to our website, iraepstein.com. Under the word, guess what? Education. It's there, because that's what it is. Move your cursor up here and you can get to that as well. In the meantime, I'm Ira Epstein. You have yourself a good day. Take care.